Welcome back. On the global oil market, prices slipped in early Asian trade today amid uncertainty over a possible extension of output cuts by major crude producers and expectations of higher supply as the Keystone Pipeline restarts. U.S. West Texas Intermediate futures were down 24 cents at $57.87 a barrel after falling 1.4% in the previous session. U.S. crude touched $59.05 a barrel on Friday, the highest level since mid-2015, fueled by the outage of the Keystone Pipeline, one of Canada's main crude export routes to the United States. Brent futures fell to $63.73 a barrel, down 11 cents from the previous close. In the meantime, OPEC ministers are heading to Vienna, Austria this week, Wednesday and Thursday that's for the 173rd meeting of the Organization of Petroleum Exporting Countries. And what should the oil market be expecting at this time? Let's talk to Pamela Basijuk, research analyst with Financial Derivatives Company, here in the studio with us. Good afternoon, Pamela. Thank you very much for joining us.
Thank you for having me.
Right, we've seen Brent crude up for almost about 20% and WTI up about 10%. A lot has happened in the oil market. That's since the last OPEC meeting in May. Now, what kind of tone do you perceive from this November 30 OPEC meeting, considering what has happened so far? We're likely to have a different tone from the last meeting.
Yeah, the last two OPEC meetings, we've seen that there was some production cuts. OPEC and non-OPEC members agreed to production cuts. And then we saw that in the 171st OPEC meeting, we saw that they agreed to cut production by 1.2 million barrels per day. And then in the 172nd, we saw that there was further production cuts to 1.8 million barrels per day. But however, I believe or expect that there will be a different tone. So what I mean is that there will be no further production cuts, and there will be no further extension. So they would keep production cuts till March 2018 and see what plays out. Why am I saying this? Because they've seen that there's been a high compliance among the members. They've also seen that they've achieved the objective of high oil prices, because now prices are above $63 per barrel. And then we've also seen that they're also aware of that average shale. The shale break-even price is around $50 per barrel, approximately $50 per barrel. And if there's a further increase, we're going to see an incentive for more shale production. So all in all, I think OPEC is going to keep curbs in place. So till probably after March 2018, they'll wait and see what's going to happen before any further.
Now, we've seen some tensions brewing between Saudi Arabia and Iran. Is that likely going to play out in that meeting?
Well, we know that Saudi Arabia and Iran have been at loggerheads for quite a while now, and we also know that Saudi Arabia is one of the largest OPEC members. But when we have to understand that for effectiveness in the oil production output deal, there has to be stability in the oil and gas market. So any instability, especially from Saudi Arabia, could become a cause for major concern. You understand? So we have to, OPEC may have to, sit down and think and look at this and say, we need to watch how this will play out. So there will be no further production cuts until March, where they see and assess the market, and probably till the tensions in Saudi Arabia cool down a bit. Now,
what about Russia? There's so much uncertainty if Russia would actually join in extending this curve.
Yeah, Russia at the moment, they've not agreed with Saudi Arabia. They've not come to a conclusion if they want to extend or not. And you see there's a lot of uncertainty on if they would comply. They've not given us a timeline on possible extensions. And why is this happening? We've seen that Russia, they're complaining of how an increase in oil prices has led to more incentives. U.S. production has been up. We've seen that the last 3 weeks, we've seen that U.S. has increased their oil rigs by 18, added 18 oil rigs, and they've also seen that their crude inventories have been up to like 9.7 million barrels per day. So they're looking at all this, and it's a cause of major concern. If we keep the U.S. is going to start fighting for our market share, OPEC market share, and that will be a huge a huge problem. So all of that is playing out as them now. I wanted to agree with the production cut.
All right. Now, Goldman Sachs came up with kind of a prediction talking about so much uncertainty and unusual uncertainty in the market, and see some kind of market downside risks. So do you also see those downside risks? What are those downside risks?
Yes,
there?
definitely, because I mean there's a lack of consensus on an apricot deal, because we've seen that there's uncertainty of rebalance in the oil markets, and then there's this uncertainty of if these prices would even stay above $60 per barrel. So with the downside risks we'll be looking at here would be US on December 12th, they're looking to there's a possible interest rate hike, and that could cause serious issues, because that would lead to a fall in oil prices. There's a geopolitical tension which we've already seen between Saudi Arabia and Iran, and then there's also the demand and supply. You know, yes, there's going to be demand, but demand will not, the forecast for demand will not meet up to what would be produced. So all these things are all the downsides to now,
talking about if oil price will remain at $60. Now, the economist, Jim O'Neill, is predicting that by next year, of course, we'll see oil price surge as high as $80 before we now see it nosediving to $60. Yeah.
I think he's really being rather optimistic, because
over-optimistic.
Yeah, exactly, because we were expecting, like I said, we're expecting a rate hike in December 12th for U.S. interest rates, and then there's going to be expectations of further rate hikes, like at least 3 times next year, 2018. So, and then once there's an increase in interest rate, we're going to see the dollar strengthen, and once the dollar strengthens, there's going to be a fall in commodity prices. So we're definitely going to see oil prices fall drastically. So I think he's being way too optimistic.
All right, we'll see how that plays out. That should be in 2 days' time,
November 30th.
30.
Yes.
Yes. Thank you very much, Pamela, for your time.
Thank you for having me.
Right, we're moving now. Nigeria's central bank may be inclined towards easing interest rates 200 basis points a full year by 2018. This is according to the head of economic research at EcoBank Group in London, Gaimin Nonyane. Monsieur Nonyane, who was on our program Business Morning, also spoke on the state of Nigerian banks.
At the moment, because of NPLs, there's a problem with regards to lending. Which of course makes sense. Credit risk remains very high, and for as long as we see credit risk being high, there will always be a problem with regards to lending, and that somehow makes the economy a bit subdued in terms of economic activity. But we're anticipating that the economy is likely to pick up, which of course will help to generate some liquidity in the markets. And then maybe assuming that the CBN begins to lower rates, hopefully next year, then we're likely to see some reduction in the borrowing rates and easing of pressure by the borrowers.
What interest rate environment easing are you looking at for next year? Give me some figure.
Well, I mean, at least two rate reductions next year. I mean, it will depend on how things progress.
You're an economic research analyst, so you should have an horizon. So give us your horizon. I'm looking at the camera. So.
Well, we're hoping, at least a 200 basis point by
full year.
Yeah, full year.
Full year.
Yeah.
Whether it is going to be 25, 25, 25 or whatever.
Well, it could be 100, 200, 100.
You want that quantum jump?
Well, you never know. I mean, it could happen. It could happen, but like I said, it depends on how things progress in the markets. If the food cost still remains exceptionally high, because at the moment that's been a main driver for inflation, while we're seeing inflation really sticky downwards.
Gaimin Nonyane, head of economic research at EcoBank London. And it's on that note that we draw the curtain on today's edition of the program. Thank you very much for watching.